Well, with that, let's invite our first guest for the morning just to get an idea of what's the global backdrop and what should be the approach or what is the approach of foreign investors towards Indian stocks. Adrian Mowat, emerging market equity strategist, joins us now. Good morning, Adrian. Always a pleasure having you with us. Well, you know, the past 2 days, the data that's coming from Asia has not been very comforting. Asia was in the green earlier in the morning. The Singapore data came in, showed a contraction of exports by 8.5%. And then now there is a little bit of red in many of the Asian screens. How would you approach Asia? Is there still growth worry or, it'll edge higher?
Yes, so the way I think about the Asian economic data is that Asia's economy was generally pretty weak last year, especially the Chinese economy. I think with regards to the Singapore trade data, Singapore is not a place with a big manufacturing industry. It's more of a transshipment zone. The trade data in Singapore is extremely influenced by the pharmaceutical industry, which tends to do batch production. So I don't really read anything from the Singapore trade data.
Adrian, my question was not really Singapore. It was just that, China's data 2 days back was very bad. And it is getting followed up by other regional countries. I mean, I know that we shouldn't read too much into Singapore, but generally, are you positive on Asian economy?
Yeah, yes, I am, because I think the equity markets are reflecting a very bearish view on economies, especially the Chinese economy. I was very struck by the way that the Chinese equity market and the Hong Kong market reacted to the Apple announcement. On both days after that announcement, those equity markets were moving higher. The sharp decline that we saw in Chinese equities in 2018 has discounted a pretty bearish view. If you pay attention to what the policy is coming out of China, we began to see some easing in monetary policy moving into the fourth quarter. There is now much discussion about tax cuts, both tax cuts for the individual and the corporate sector. So I think you've got a classic situation here where the capital market is discounting a very bearish view. The policy is now moving more pro-growth. We're getting bad economic data, bad announcements coming out, yet equity prices are very resilient. I think that's a strong buy signal for these capital markets.
Okay, Adrian, good morning. Your thoughts on Indian market, especially the profile of Indian market. The last few weeks, it's been once again about the IT stocks which are doing well, while some of the domestic stocks are once again taking a bit of a backseat. I mean, your thoughts on how to approach a market like India now?
Yes, so I think there was undue bearishness around the global economy, particularly the US economy, which the IT sector is very sensitive to. The other thing to remember in the final quarter of last year was that the rupee had been very weak for much of 2018 and began to recover as we went into the later part of the year. So you really had two negatives working against the IT space. Since then, we've got a degree of stabilization in the currency, but I think much more important is the macroeconomic data out of the US has been very strong. I think those employment numbers are extremely positive. The US created more than 300,000 new jobs. The participation rate went up, so the unemployment rate went up, which is a very nice combination. So you've got more people working, yet you don't have the sort of inflation pressures that you might have if the participation rate hadn't moved higher. So I think those were very bullish signals for Indian IT, which had been sold off in the global sell-off in December 2018.
Adrian, hi, good morning. There's one view in the market, though, that there could be a derating in Indian markets because of the expected fiscal profligacy that the government may adhere to on account of the farm loan waivers, etc. Would you be concerned, and would that be your view as well?
Look, I think that is a very reasonable concern. The other argument, perhaps, for a derating in the Indian market, and you sort of mentioned this in the introduction about how well India had performed relative to other markets. is that we've saw a dramatic derating in many major equity markets in 2018. You didn't see the same thing in India. So I think on a relative valuation basis, you may also have pressure on PE multiples, and perhaps you could compound that with people trying to price in the risk of uncomfortable policy as we move closer to the general election.
Okay. So at the moment, overall, what would your view be on Indian equities? You know, the Nifty is knocking at the doors of 10,950 for what, 8-9 times in the past 8-9 weeks. Is it going to break through higher as the results flow in?
So I think there's a chance that it breaks through higher, but it will be taking clues from other equity markets. Always difficult to say this, from the perspective of the global investor when talking to friends in India. But I think there is more upside in other emerging markets and also in the US equity markets.
Okay.
If the China data begins to respond to more accommodative policy, then the chance of Chinese equities continuing their outperformance, which we've seen so far in 2019, is very strong. A resolution in the trade dispute between the United States and China would be very strongly reflected in the Korean and Taiwanese markets, which, don't forget, are the second and the third largest markets in emerging markets. These are the markets with the biggest exposure to exporters. So if you get a resolution in that, I think you get strong outperformance out of Korea and Taiwan. So India, after being a strong outperformer in 2018, is probably going to be in a bit of a laggard. Okay. The other caution I would like to make in just interpreting what's going on in markets at the moment is that there was a dramatic sell-off towards the end of last year. You're getting a recovery from that sell-off, and that might tell you a little bit more about positioning as opposed to medium-term trends.
Sure. Adrian, we'll have to leave it at that. Thank you so much for joining us and giving us your thoughts. Have a great day. That's the word coming in from an emerging market expert saying that there could be a derating in India because of the uncomfortable policy action that the government might undertake in the election year. It's a big day today, though. Come 6 p.m. and all roads will head to CNBC TV 18's India Business Leader Awards. Stay tuned to our live coverage to catch the tallest business leaders and the most important voices from New Delhi's political circles.